Hi everybody, let's have a look at gold and the actual economic situation. As presented in the chart, gold prices have been rising since 2016. But to give a broader overview of the price of gold, until the Bretton Woods Agreement in the 70s, gold was $35 per ounce. This means that the dollar lost 99% of its value since then. We could ask ourselves, why is it that the dollar lost so much value? This is due to the money supply in the market. The more abundance there is of a good or a service, the less the value it has. For example, looking at the graph, we can see that since the early 80s, there is 10 times more dollars now. We can observe that the main times of aggressive expansion of monetary supply are the economic crisis. And by the way, the situation of the other currencies is the same or even worse. So, from one side, we have inflation from the increase of monetary supply, but right now we are also dealing with high oil prices, which also generate inflation by themselves. And here in this graph, I added the comparison of the price of food and the oil price. There is a very high correlation between both of them. Additionally, we have to keep in mind that in the high oil prices, not only they generate inflation, but if sustained in time, they can also slow the economical growth. In this first picture, we can see a comparison of the GDP growth versus the debt growth in different regions. As we can see from the 2021, all regions are growing debt faster than the real GDP growth. This will lead to high expenses for the public finances due to the interest of the loans that will not be backed by higher revenues from the GDP increases. This means that countries will have to raise taxes to cover the deficit, print more money, the invisible tax, or adjust the public spendings. In this graph, we can see at the left the federal debt as a percentage of the GDP, and at the right, the federal deficit of the GDP. So, as we can see, the US have high debt and a high deficit, which means that they have a limited margin to increase debt, and any increase in the interest rates will also affect significantly the deficit because of the interest to be paid. In this figure, we can observe the public expenses in percentage of the GDP, which have been increasing. This situation is the same for most of the countries, so the possibilities of countries fixing deficits by reducing the size of the government is low in general. So, since the debt is high, the deficit is high, probably the easiest way for governments to deal with these situations will be through inflation. This is where gold comes as a strong asset to keep the purchase power. In this page, we have at the left the median sales of the houses sold in the United States per ounce, and at the bottom right in US dollars. We can observe how gold was able to keep the purchasing power between 100 to 700 ounces in the worst times, while the price in dollar went from 20K to 400K, which is 20 times higher from the very beginning. To finish, I want to show the annual return of gold, silver, the S&P, Nasdaq, and the MSCI World in the last 10, 30, and 50 years. We can observe how gold in the last 10 years had the same performance of the S&P and the MSCI. So overall, gold has been a very good way to protect the purchasing power in the past and could have even been considered as a solid investment for a conservative profile in those years. With all this being said, I thank you for watching this video and see you in the next ones.